Okay, now see this question. It is saying calculate cash flow from operating activities from the following information. What are the informations given? First thing is given net profit after provision for tax and proposed dividend. So it is after tax. So we need net profit before tax. Now provision for tax is given 50,000. Then proposed dividend, because last year proposed dividend will be only considered in cash flow statement that we have discussed on Saturday. Then depreciation, it is a non-cash expense. Loss on sale of plant, it is a non-operating loss. Goodwill amortized, again non-cash. Gain on sale of land, it is a non-operating income. Income tax paid, wait for that, income tax refund. Okay. Now we will first calculate net profit before tax. For that we will prepare a working note. Net profit before tax and extraordinary items. This we have to calculate. Net profit after tax is itself given. How much it is? It is 1,10,000. Then we have to add provision for tax, dividend, and reserve. These three things are to be added. So we will add provision for tax in it. Provision for tax. Provision for tax is 50,000. Then we have to add proposed dividend of previous year. If current year proposed dividend is given, that need not to be considered. Okay, now proposed dividend of previous year is proposed dividend of previous year. It is 50,000 again. Now, so these are two are to be added, and then refund of tax is also given. So first we will add them. Now the total will be 1 lakh. It will become 2,10,000. 2,10,000. Then we have to deduct refund of tax less refund of tax. Refund of tax will be 40,000. it will come 1,80,000. So 2,10,000 minus 40,000, it will be 1,70,000. So this is my net profit before tax and extraordinary items. I can show it also in the cash flow statement, but because there are a lot of things to be presented, so to make it simplify, we can, and we should present it like this only, 1,70,000. Okay, so now first step has been completed. In the first step, we have to calculate net profit before tax and extraordinary items. Now we have to add non-operating expenses and non-cash expenses in that. Add non-cash and non-operating expenses. Now we will revise and we will check it. So provision for tax has been considered. This has been considered. Now depreciation is given. Depreciation and goodwill amortized. These are two non-cash expenses, 20,000 and 40,000. That we can add here. Depreciation. This time you are getting these amounts in the question itself, but in future you will have to calculate these amounts also by preparing proper working notes, preparing some accounts, using some informations given in the question. So that's why it needs a lot of practice. Goodwill amortized, or we can say goodwill written off. Goodwill amortized is 40,000. Now there is one loss on sale of plant, 10,000, that need to be added. $10,000. So in total it will become 70,000. Now first I will add them up. Now the total will become 2,40,000. Further, we have to subtract the non-operating income. So one non-operating income is gain on sale of land. This much only. So less non-operating incomes. And non-operating income is here, gain on sale of land. Gain on, only few accounts are there that need to be added or subtracted. So once you will revise them properly, gain on sale of land. Now gain on sale of land is 40,000. So now after adding and subtracting these non-operating and non-cash items, I will get operating my profit. my cash operating profit I will get. So that will be now 2 lakh. So my cash operating profit is 2 lakh. So this is the second step. First step was calculation of net profit before tax and extraordinary items that I have calculated. And now the second step was calculation of operating profit before working capital changes that also I have calculated. Now in the third step, I have to adjust current assets and current liabilities. Now see in the question whether any current asset or current liability information is given, because you need both of the balances. That is not given here. So because it is not given here, we will be directly getting cash generated from operations. So actually this operating profit before working capital changes will automatically become now, because no working capital information is given in the question, it will become cash generated from operations. Now out of this cash generated from operations, you have paid some tax also. So that tax has to be considered, and how it will be considered? It will be written here less income tax paid. Because at the time when we are calculating net profit before tax, at that time we have subtracted this refund of tax that need to be adjusted in income tax paid also. So you should write it here 50,000. 50,000 you have paid and 40,000 you have got back. So ultimately you have paid only 10,000. You can see, if you are feeling any confusion, that here also you have added 50,000 and you have subtracted 40,000. So same you are adjusting in the net profit before tax, and later on you are showing it as deduction also, because ultimately you have paid this amount. So tax we are showing separately. So now my net cash generated from operation will be there. Net cash flow from operating activities is equal to 1,90,000. This is the answer. Okay. Now see this question also. It is saying calculate cash flow from operating activities from the following information. Now the first information, see, this time you have been given 2-year balances for 2018 and 2019. Surplus in balance in statement of profit and loss, it was 1,10,000, it is 1,20,000. So last year it was 1,20,000 and current year it is 10,000. That means because you have to do closing minus opening, it means you are having a 10,000 rupees loss. Then trade receivable, prepaid insurance, outstanding rent, trade payables, these all are your current assets and current liabilities. Goodwill has been given, however, it is a fixed asset. but we have to think whether we have to check whether it is purchased or whether it is written off. Here, the balance was previous year balance was 76,000, and the current year balance is 80,000. That means it is increasing by 4,000. Now, when your goodwill can increase, or you can say when your any asset can increase, only in one situation if you are purchasing that asset. In that situation, your value of asset can increase. Now, purchase of goodwill means purchase of any asset, and that purchase of asset is part of investing activity. If it would have been reverse situation, like if the opening balance was 80,000 and the closing balance was 76,000, in that situation, goodwill was reducing, and the reason for reducing it may be for amortization. So that in that situation, it would have been goodwill written off or goodwill amortized. That we will be considering in operating activity because it will be a non-cash expense. But here, because the old balance, previous year balance was less than the current year balance, that means actually it is a purchase of goodwill, and purchase of goodwill will go to investing activity. So goodwill will not be considered here. Now we will again move stepwise. See, we have been given balance of profit and loss account, closing balance is also given, and opening balance is also given. So that we will consider. We will write first closing balance here. Closing balance is 1,10,000. We can show it in working notes also. And the opening balance is 1,20,000. So from 1,10,000, I have to subtract 1,20,000. And because if I will be reducing it, I will get a 10,000 rupees loss. And how I will be writing the loss? In this manner. Class is about to finish, and we will join in the next class also immediately after this class. Okay. Now this is my loss. So here I will write here, instead of writing it profit now, I will write here net loss. Okay. Now afterwards that, this is the first step we have completed. Second step is we have to calculate the operating profit before working capital changes. Now how we calculate it? We have to add the non-cash expenses and non-operating expenses. So first see the information which is given here. The point is that here no information is given about non-cash and non-operating expenses. In the question which we have completed previously, no information was given for the current assets and current liabilities. In this question, no information is given for non-operating and non-cash expenses. So that's why we will escape this step. Now we will directly reach to step third. And step third is saying that you have to add the decrease in current assets and increase in current liabilities. So first we will check this current asset, trade receivable. The opening balance was 62,000 and the closing balance is 50,000. It is reducing because last year balance was more than the current year balance. So obviously it is reducing. So it will be added here. Trade receivables. Trade receivables. Now difference we have to consider only. 62,000 minus 50,000, that is decrease of 12,000. Then second is prepaid insurance. It is also a current asset. So 4,000 was the closing opening balance and 8,000 is the closing balance. So it is increasing. So increase in current assets will be considered here. So it will be written here, prepaid insurance. Prepaid insurance is increasing by 4,000. So that need to be subtracted. Because it will increase only in the situation when you will be paying insurance premium in advance. Outstanding rent, it is your current liability. It is also decreasing. Decrease in current liability is also to be reduced. outstanding, because your liability will reduce only in the situation when you will pay it back. Outstanding rent. Outstanding rent is how much? Reducing it is 24,832, 18,000 it is reducing, 18,000. Then trade payables, it is also a current liability. Earlier it was 38,000, now it is 26,000. So it is also reducing, so it will also be subtracted. Trade payables. Trade payables is 12,000. Okay. Now we have to add, we have to add only one current asset. So I will write this amount here. Now you see, practically this amount is negative amount. 10,000 is a negative amount and 12,000 is a plus amount. So when we will be adding the amount in a negative amount, it will automatically become subtraction. Now what will be the result in that case? The result will be 2,000. Because plus amount is more than the negative amount, that's why the answer will be in plus. You have to be careful about these things. Now after this, I will subtract these amounts. Now the total amount, it will be 34,000. But I have to subtract this amount. Okay, now 2,000 minus 34,000. What will be your answer? Your answer will be 32,000, but it will be negative amount because now minus amount will become more. So we will put such amounts in brackets. And this one. And here I will write, the answer will be now cash. See, if it would have been in a positive amount, it would have been cash inflow. So we would have been writing here cash used in, cash flow from operating activity. But because it is a negative amount, that means we have not received any cash. In fact, our cash is outflowing. So it will be termed as cash used in operating activity. Cash used in operating activity. So if the answer is negative, then the term will be used cash used. And if the answer is positive, then the term will be used as cash flow from. In this way, you have to solve the question step by step. Always follow the steps, don't escape any step. Rest we will do in the next class.